Okay, check the answer to homework question. 4 questions I had given in NR taxation. Question 2, 3, 4 and 11. So first I will discuss question number 11. This question was on chapter 12A. NRI, Sargo, okay. See, how do I know it was on chapter 12A? See, at the end it was given. See the last lines of the question. Compute the tax liability by Pranab for assessment year 26-27 as per the provisions of chapter 12A. If you remember in my last lecture I told you any question on chapter 12A they will mention that you have to go as per chapter 12A. And you know why it is necessary for them to mention? Because these are optional provisions. And how do we know whether assessee has opted for that or not? So if he has opted, the question will mention solve as per chapter 12A. Just the way here it is given as per the provision of chapter 12A. And for slab rates you have to apply old regime. Tell me why this old regime information is important? Because see in chapter 12A only this Sargo incomes has a special provision. All other income will be subject to normal rates. But in normal rates, whether to apply slab rates of old regime or new regime, even they will specify that thing in the question. So here in the question they had mentioned that he has opted for old regime. So when you apply slab rates, you will apply the old slab rates for other income. But Sargo income will be subject to special rate. And see, if you remember last lecture, one question I had discussed, question number 1 on chapter 12A. In that question, I had explained you one trick of solving chapter 12A. What is that trick? Whatever incomes are given in the question, you will classify into ILO. Like this, see. All the incomes, see, they will give list of incomes in the question. In chapter 12A questions, they will give you a list of income. And that you will have to divide into I, L and O. What do you mean by I? I for interest and dividend from Sargo. And what is L? Latakji from Sargo. O for other income. And if that classification is done, it becomes simple for you. Because tax rate on I will be 20%. Latakji on I, Latakji from, tax rate on Latakji will be 12.5%. And other income it will be normal rates. Okay. So we'll do one thing. We'll classify all the given incomes into ILO. See, first in the question they had given is NRI, and he has to be NRI because chapter 12 is applicable only to NRI, non-resident plus Indian. So they have given that he is NRI. And what is the age? 61 years. Now 61 years, generally you will feel he is a senior citizen. But in income tax, the tag of senior citizen is allowed only to a resident assessee. At many places there are special provisions for senior citizen, but under income tax law senior citizen means resident person with the age of 60 and above. Here although the age is 60 and above, but he is not resident, so he will never get the tag of a senior citizen. This point I clarified at the end of last lecture. Last lecture, I warned you about certain points, that in the question of non-resident, never consider rebate. In the question of non-resident, never get carried away by the age, because non-resident, even if he is 100 years old, he will never be called senior citizen under income tax law. And one more warning I gave, in non-resident, you don't get unexhausted basic exemption benefit. And then one more thing I said, whenever non-resident TDS you are calculating, it is TDS rate plus surcharge and cess, because TDS of non-resident as per actual rate. This 4 point I had explained at the end of last lecture, if you remember. Then in the question, let us divide all incomes into ILO. The first income is loss from house property located in India. Now tell me, loss from house property, is it Sargo income? It's not Sargo income, na? So I will give the category of O. What do you mean by O? You understand, ILO means I is interest and dividend from Sargo. L is Latakji from Sargo. O for all other incomes. See, this is not income, it's a loss, but whatever, it is a loss in I, L or O area. It is from the area of O for others. And you know what is the treatment of house property loss? House property loss can be set off with other heads only up to 2 lakhs. This point you studied in CA Inter. Anyways, I am not assuming your CA Inter. Even I am going to teach you a topic called set off and carry forward. And in the topic of set off and carry forward, you will study whatever loss you make under the head house property, you can set off with other heads, but only up to 2 lakhs. And if you go under new regime, even that 2 lakhs cannot be set off. See, just fix this in your mind. This point, if you remember, I had mentioned while explaining 115 BAC. Again, I will explain this in the topic of set off. But right now, you tell me what is the rule for house property loss? If under house property head, if you have losses, and if you are under old regime, up to 2 lakhs you can set off with other head. Only up to 2 lakhs. And if you are under new regime, HP loss cannot be set off with other head. So here we are under old regime. We are following old slab rate system. Then we can set off loss of 2 lakhs with other head. Actually, in the question they have given loss of 2,50,000. But up to 2 lakhs we can set off with other head. With any head you can set off, but only up to 2 lakhs. So how to do that set off I will explain. But keep in mind that this loss we will have to set off. Then we have got income from business carried on in India. Tell me, this is which category? I, L or O? See, I and L is only for Sadgo income, na? So business income is general other income. So what will I mark here? O. See, let me reinforce once again. Chapter 12 is sum. Only if you solve as per the method which I am explaining, I, L, O, it will go smoothly. Okay. These things I have also evolved over the several years of my experience. I have seen in my early years of teaching, I used to feel why chapter 12 is some students are finding tough. Because I noticed students go according to the information provided in the question. And then I realized they get messed up with the information provided. See, in the question they will always provide information in messy manner. But don't go as per the information of the sum. Go as per our system. That's why I made a system. My system is whatever they give in the question, classify into I, L, O. And then it becomes very simple. And then the rule is so simple that all I income, 20% tax, L income, 12.5%, and it can be exempt also if reinvested. All other O income subject to normal rate. So once I started using this trick, I also found very comfortable in teaching. Okay. Now try the next point. What is it? ILO, interest on debentures of Indian companies subscribed in US dollar. This is Sadgo income. How do I know Sadgo? What is the full form Sadgo? Shares of Indian company, debentures of Indian public company, deposit with Indian public company, government security, other notified security. So this is debentures of Indian company. But Sadgo should be acquired in foreign currency. Here it is acquired in foreign currency. So this is straightforward fitting in Sadgo. And anything from Sadgo, it will be called as I. I means interest and dividend from Sadgo. Then interest on loan taken for purchase of above debenture. Now interest on loan taken, this is interest income or expenditure. It is expenditure because we have taken the loan. On taken loan you have to pay interest. So this is expenditure. So see what I have written here. Look, expenditure. And if you remember what is the rule? Expenditure deduction is not allowed in chapter 12A. So see, although I have written the word expenditure, then I will strike it off. I will put a cross mark on this, means ignore the expenses because the tax will be on gross basis. Then there is sale of debentures. Sale of debentures means this is which income? Tell me, I, L or O? It will become L. Latakji from Sadgo. Because when you sell something, it will create capital gain. But is it long term? It is long term. See, we purchased the debenture in 13-14, sold in 25. The period is more than 1 year. Why did I say 1 year? For listed security, short, long is decided by 1 year. So it is long term gain. And what is the amount of long term gain? This is a sale price 8 lakhs, cost is 5 lakhs. So capital gain will be 3 lakhs. But this 3 lakhs is generally taxable at 12.5%. But if it is reinvested in another Sadgo or notified savings certificate under 10(4)B, then it will become exempt. And here the formula of exemption is same as 54F. You remember that formula of exemption? It was like this: gross Latakji into CNA upon net consideration. So let me see whether he has reinvested. See, this information says it is capital gain, but whether to exempt or not depends upon whether reinvestment is done within 6 months. Wait, before that, let me show you. I have written here L. ILO, it is L. See, those who are watching the video lecture, make sure you also do this marking, because this marking will remind you the method of solving. Because this video lecture, you will not repeatedly sit till exam day. Once you see the video, thereafter you have to do self-study. Then, brokerage will come in transfer expense. This is useful in calculating capital gains. Then, just read these 2 points first. These 2 points are connected with sale of debenture. You know here what is the connection? After sale of debenture, you have reinvested in another Sadgo. And if you reinvest in another Sadgo within 6 months, your capital gains become exempt. So see here, you have reinvested in what? Shares of Indian company. See, reinvestment should also be in Sadgo. So this is shares of Indian company means Sadgo. And when did you reinvest? On 31st December. And what is the timeline? Within 6 months from the date of transfer. So when did you sell the debentures? On 31st July. So after that 6 months, if you count, it will be August, September, October, November, December, Jan. By the end of Jan, you have to purchase new Sadgo. And here it is December. So this will qualify. And you know this 3,94,000 will be called as cost of new asset. Cost of new Sadgo. See, I have written here CNA. CNA means cost of new asset. This short form I used to use in capital gains. Cost of new asset, and it is eligible for exemption. Why eligible? Because it is within 6 months. Then he has also invested in notified savings certificate on 25th of Feb. See, investing in notified savings certificate is also eligible for exemption. But that reinvestment thing should happen within 6 months. Here it is on 25th Feb, which is beyond 6 months if you count from 31st July. So it is not eligible. So see here what I have written. Although this is my cost of the new asset, but crossmark means it's not eligible for exemption. You know, this is exam question. Imagine in exam 6 to 8 marks fixed you will get in this. Sometimes this comes for 6 months, sometimes for 8 marks. These are bonus topics. Take NR taxation very seriously because these topics are small in size, but there is a lot to remember. Then, wait, one point I missed in between. After brokerage, which comes in transfer expense, there was one more point. Read this. Interest on deposit held with private company. Now tell me, deposit with private company, does it come in Sadgo? No, it doesn't fit in Sadgo, because in Sadgo we had debenture and deposit of Indian public company. Here it's a private company, so it is not Sadgo. And if it is not Sadgo, what will I classify it as? I, L or O? I will classify it as O. O for other income. So see, I have written also here O, other income. Then below they have given some information. Calculate the tax liability, that is okay. But see, read this. What will be your answer if the shares acquired on 31st December, means these one, are sold on 30th June 26. You know, capital gains is exempt when you reinvest in new Sadgo. But that new Sadgo you cannot sell for 3 years. There is a lock-in period of 3 years. Just like in capital gain under all 54 section, there was a lock-in period of 3 years. Here also there is a lock-in period of 3 years. And within 3 years, if you sell the new Sadgo, exemption will be withdrawn. And here it is not reduced cost approach, full cost approach. If you remember in capital gain, I told you that in whichever section the assets are same. And if you break the lock-in period, you cancel the exemption from the cost. You reduce the cost only. But in those sections where assets are different. And if you break the lock-in period, you don't touch the cost, exemption is separately withdrawn. So here it is same asset or different asset. Here actually it is same asset, but still here exemption is withdrawn by full cost approach. Here law has not mentioned reduced cost approach. Means you know what you will do? On sale of new Sargo, you will calculate capital gains, plus you will also withdraw the exemption separately. I'll show you how to withdraw the exemption, but this is an additional question. First, let me solve the basic sum. Basic sum is on tax liability. So tell me, for tax liability, you will prepare two statements. One is statement of total income and then statement of tax. And generally, statement of total income we prepare headwise. But here, if you remember in the last lecture, I told you, don't struggle to show the income headwise. It's better you show ILO in that pattern. So see, I have shown like that only. Look, ILO. I for investment income is interest and dividend from Sargo. In exam, don't write Sargo. You have to write foreign exchange assets. Then Latakji from Sargo. But in exam, don't write Sargo. Write foreign exchange asset and other income. So see the presentation of my answer. ILO. And then tell me which incomes we have in I. Look at the question. I have done the marking in front of you only. What incomes you have in I? We have only one income, that is interest on debenture. No other income from ILO. ILO. No other income. Okay. So this I income I will write here. 1,50,000. And there was expenditure connected given in relation to that, but we will ignore because deduction for expenditure is not allowed. It is taxed on gross basis. Okay. Then ILO, what is the next category? L. L for long-term capital gain. But for long-term capital gain, see, I have shown working note because we will have to calculate the capital gain and then claim the exemption. And how will you calculate capital gain? See, the working is simple. Look, debenture selling price was given 8 lakhs, brokerage was given, which will come in transfer expense, cost was given 5 lakhs. So your capital gains is 2,88,000. Now you have to check whether the net consideration is fully reinvested in the new Sargo and the notified savings certificate or partly reinvested. Because if fully reinvested, capital gain becomes fully exempt. So you have to check how much net consideration is reinvested. So tell me, what is the reinvestment amount here? Look, reinvestment amount, there are two reinvestments. Shares of Indian company and notified savings certificate. But this you will ignore. You will take only shares of Indian company which has invested within 6 months. So that is 3,94,000. So what you will do? You will compare this with 3,94,000. So what you realize? Net consideration is fully utilized or partly? Partly. You will get proportionate exemption. And I remind again, here exemption formula is same as 54F of our capital gain. See here, gross Latakji into CNA upon net consideration. So gross Latakji is 2,88,000. CNA cost of new Sargo is 3,94,000 divided by net consideration 788. So this is the amount of exemption. So balance will be taxable. And this will go in the statement of total income. See this 1,44,000. So see, I was arranging I, L and O. Now in O, all other incomes I will write. So what do I have in all other incomes? See, there are 3 O's in the question. Check O, O, O. Which are the 3 O's? Business income, interest from private company and HP loss. And HP loss you will deduct. Within all O incomes, one is loss, na? But HP loss you can set up only up to 2 lakhs. So see what I have done. From business income of 3,50,000, HP loss I have set off up to 2 lakhs. And after set off, business income is 1,50,000. And there is one private company interest also. Why private company I have shown in other income? Because in Sargo, we have debentures and deposit of public company. Since it is private, it will come in other income. So in short, the method is simple. See, understand the method of solving because there can be 100 varieties of sum. Method is only one. And if your method is foolproof, your answer will be definitely right. So this was I, this was L, and these two incomes are O. And then gross today income. Chapter 6 say even if not there, not allowed. In Sargo theory, chapter 6 is not allowed. Yes, chapter 6 say you can claim for other incomes. Huh? See, chapter 6 is not allowed for interest dividend from Sargo. Long-term capital gains, anyways, it doesn't get chapter 6 say. If you remember one lecture I told you, all special rates income, Satak, Latak, winnings, they are not eligible for chapter 6 say. But these other income, you can take chapter 6 say. So in our question, if you see, we have other income of how much? We have other income to the extent of, look, 2 lakhs. So to the extent of 2 lakhs, if some chapter 6 is possible, you can claim. Like in the question, they can create some chapter 6A atmosphere. So you can claim chapter 6A, but only to the extent of 2 lakhs. Because only other income is eligible for chapter 6A. Sargo income not eligible for chapter 6A. So tell me, by chance, if they say some like he has deposited in PPF, he paid LIC premium, you remember ATC? See, I will formally teach you chapter 6A, but some basic idea you have, na? So in case he has invested in PPF, etc., he can claim chapter 6A ATC, but only for this 2 lakhs. But these two items are not eligible for chapter 6A because these are Sargo oriented incomes. Okay. Anyways, here there was no chapter 6A. Then see, the way I made statement of total income means ILO pattern. Tax calculation also is in the same pattern. See the pattern, look. I, L and O. See, I want to repeatedly fix in your mind, chapter 12A question should be solved by ILO method. Okay. So here what is the I amount? 1,50,000. See here, from here it has come. Then what is L? 144. And what is O? 2 lakhs. And then apply the tax rate on interest dividend from Sargo, 20% tax. Latak G, 12.5%. Other income subject to slab rate. Slab rate, whether to follow old or new one, it's given in the question. Old slab rate. And under old slab rate, the tax will be 0. And rebate is not allowed to NR. See, if you remember, people having NTA up to 5 lakhs, they are eligible for rebate. His income is up to 5 lakhs. Actually, he is eligible for rebate. But because he is non-resident, he will not get rebate. Rebate is meant only for resident assessees. So, rebate not allowed. Surcharge comes only when the income is above 50 lakhs. Here it is not above 50 lakhs. See, don't forget, he is an individual person. Huh? We are applying the rule of individual taxation, not companies. Health and education cess is there and your tax comes to 49,920. And then one more thing was asked. What will be your answer if the new Sargo is sold? See, there is a rule when you do reinvestment, the reinvested Sargo you cannot sell for 3 years. And see, the new Sargo he has acquired on 31st December and he has sold on 30th June 26. He has not kept for 3 years. That means he has broken the lock-in period. So what happens? Exemption will be withdrawn. But first you calculate capital gains. See, new Sargo is sold for 4,50,000. This is the selling price. And cost of the new Sargo was 3,94,000. So first your capital gain will come. And that will be short or long? Short. Why short? Because you acquired the new Sargo on December. And then soon in the month of June, roundabout in 6 months, you sold the new Sargo. And shares are long only when held for more than 1 year. So here 3 years, so less than 1 year, so it will be short term. And what is the capital gain? Sale price minus cost price. But exemption will also be withdrawn. See, how will you show that? Look here. First you will calculate capital gain. And that will be short term because you sold a new Sargo in 6 months only. And later you have to write this note. See this. What is the note? In addition to above Satak G, exemption of Latak G shall also be withdrawn. Why did I say Latak G? Because see, by reinvestment you claimed 1,44,000 of Latak G exemption. So if the exemption was granted at Latak G, it will be withdrawn as Latak G. But that you will have to show separately as a note. If you remember in capital gain, what we used to do, we used to subtract it from the cost only. But this system is not applicable here. Huh? In chapter 12A, a similar provision is there for lock-in period. But if you break the lock-in period, exemption allowed earlier will be separately withdrawn. If it was exempted as long, it will be separately withdrawn as long-term gain. Okay. So this was question number 11. Then we had question 2, 3, 4 and 4 for homework. See question 2, what was given? Bronze Limited is a company incorporated in Russia. See, in this topic, you will have to figure out what look. You will have to figure out the question is on which section. And see, how will you come to know that you are tested on special rates? Special rates is of tax, na? So in the question, obviously the target will be tax liability. So see, once you know it's a question of non-resident and they are asking you to calculate tax liability. So it's a hint that they are testing this knowledge. But the challenge is what how to figure out which section is applicable. There are so many sections of special rates, huh? So that you will have to figure out by reading the question. But how will you get the hint? See, right now you know that I am teaching this, so question will be on that only. But don't forget, NR taxation is a big topic. It has got 8 sections. How will you identify that you are tested on the special rates? So the test is whenever they ask tax liability, whenever they ask tax liability, then that is a hint of chapter 12 and 12A. Because what is special in chapter 12 and 12 is rates of tax. So see here, because the question is on tax liability, I got a hint. Plus, the company given in the question is a foreign company. Can you see incorporated in Russia, Bronze Limited? So foreign company, that means they have created a situation of NR and tax liability. That means you have to use this knowledge, special rates knowledge, okay? Now tell me, how will you figure out that out of these sections, which knowledge will be useful? So for this, if you remember last lecture, I had given one jumbo chart. See that mega chart. You have to see if the question has got OFO, 115AB, question has normal NR, bond GDR, 115AC. Sorry, this was AB, last one was. Then FI, then 115AD. So you have to figure out which section is applicable. So see, if in the question, if you see, Bronze Limited is a normal foreign company. How do I know foreign company? Incorporated Russia means foreign company. And foreign company fits where? In this jumbo chart. 115A. See FCNR. So this is a hint that question will test you on 115A. See, actually, foreign companies can be FII also. See, FIIs are generally big foreign companies. But for FII, they will mention in the sum FII. In our question, they have not mentioned FII. Na? It's just a plain foreign company. And plain foreign company means it's a hint of 115A knowledge will be useful. Okay. So this way you get the clue. So now see in the question what information is provided. First point. Now mentally I am set with 115A. 115A. Read. Interest on foreign currency loan given to Indian concern. See, this is income or expenditure? Income, because they have given loan. Bronze has given loan, and when they give loan, they earn income from that. Na? So tell me, this fits where? Firstly, it is 115A because foreign company, and if you see IDU, in 115A, we have got special rates for interest, dividend, units and royalty income. So precisely it fits where? It is interest income. Question is of foreign company. But interest income, generally it is taxable at 20%, but sometimes it is taxable at 5% also, 4 also, 9 also. So how to figure out? You have to read the sum, na? See what is given? Foreign currency loan given to Indian concern. So just check. Does it fit anywhere? Is foreign currency loan given to IDF? IDF is not written. What they have written? Foreign currency loan given to Indian concern. Indian concern. So check where does it fit. See, loan is given to IDF, then 5%. See, this FCNR is giving loan to Indian people. Huh? FCNR means foreign company NR. And in our question, foreign company is Bronze Limited. So if they would have given loan to IDF 5%, but here they have given loan to whom? Indian concern. So where does it fit? Some people will say, sir, Indian company. See, Indian company means company. A joint stock company having shares or a business trust. Then you should be inclined to 5%. Here what they are saying, Indian concern. You know the word concern is a general term. Any entity doing business, is a concern. Like SHIRISH VYAS, he is doing coaching class business. So my coaching class is a concern. See, concern is a general term. Any entity who carries on a business is called concern. It can be individual, partnership firm, company, it can be anything. So do you know the type of the entity? They have just mentioned concern. So you will not take this thing. This 5% applies when? When the question is on loan given to an Indian company. They should literally write the word company or business trust. Company has a specific meaning of corporate type of entity like Reliance, Wipro. They should have given loan to them. But here the word concern is a general term. Who knows? It might be some sole trading concern, partnership firm concern. You don't know, na? So that's why I will not use this 5%. So see, one by one I am ruling out. Why not this 5%? Because loan is not given to IDF. Why not this 5%? Because loan is given to some general concern, not Indian company. And why not this 4 and 9? Because for this they should mention, it should be rupee denominated bond listed in IFSC. So nowhere these things are fitting. Even this is ruled out. This one. Which one? Loan given to IFSC unit. See, this concern, is it located in IFSC? No. So even this point is ruled out. If you remember, if interest is from loan given to IFSC people, then it is exempt. So here it's not given that loan is given to IFSC people. So in short, one by one, I ruled out these smaller rates. So if nothing fits, then what is the general rate for interest? 20%. See the method of solving. Answer is not important. If I would have asked you to just see the answer, you would never have understood. Na? See the line of thinking. How do I think? So the way of thinking is, if interest income is there in the question of FCNR, just figure out whether these rates apply or not. And you can easily check the applicability if your provisions are thorough. So here I saw that nothing from this is applicable. So general 20% tax rate. So see, I have written here also, read 115A, 20% tax. Then try this second point. See, these are all income points. So see, it's written also. It's income during the previous year 25-26. These are incomes. So what is the next income? Interest on foreign currency loan. See, why they are saying foreign currency loan? If you remember last lecture I had explained, in whole 115A, either we should get foreign money or foreign brain. So foreign currency is must. Except in dividend, if you remember I said, in dividend there is a glitch in the law. They have not mentioned foreign currency requirement. So in dividend, it can be anything. But rest all places, foreign currency should be there. So I am feeling happy by looking, oh, foreign currency loan is given, good. And it is to infrastructure debt fund. Plus it is an interest point, interest. So interest point, interest. If loan given to infrastructure debt fund, It fits here. So what is the rate? 5% tax. So 5% tax, section is 115A. Clear? See, TDS is deducted. Look, if interest is earned from IDF, the payer will deduct TDS under 194 LB. And tell me, here we are the payer or the receiver of income? See, Bronze Limited is a company who is earning the income, na? We are the receiver. So for receiver in TDS, only one point is relevant, that if you receive net of TDS, in your computation you will show gross. See, here we are not IDF, we are bronze. Bronze is the receiver of the income. And if you remember in the chapter of TDS, I told you, for a receiver, he has to just keep in mind any income subject to TDS, you have to show gross. And tell me, here this is mentioned that it's net or gross, nothing. So we'll assume it is gross. See, these taxes are already deducted at source in real life. But the given figures, if nothing is given, we have to assume they are they are gross. You know why I'm checking? Because by chance, if they would have given net of TDS, in my computation, you have to show gross. This is a rule which you have to always follow whenever you receive income. Net of TDS, you have to show gross. But here, I am assuming the given figures are gross because they have not mentioned net. Then, next income is royalty income. Tell me, what is the rule for royalty income? Explain me the rule fast. Royalty income, if royalty agreement is approved by government, it will be subject to 20% tax. But be careful, if royalty is routed through PE, through their PE in India, then normal rate as per 44DA. So whenever royalty comes, you have to check what? Whether the royalty is routed through PE in India or it has directly come from India. So check here. Here have they mentioned it is routed through a PE in India? No. So that means royalty is generated directly from India. See, here we are Bronze Limited. So we are directly getting royalty from Indian entity. So tax will be 20%. So here tax will be 20%, 115A. But there is one more condition. If you remember, for 20% also the agreement should be approved by government. Here it is not given whether agreement is approved by government. So we can assume the government agreement is approved by government. That's why I am taking 20% tax. And what about the expenditure? Generally expenditure you deduct from the income, but your expenditure deduction is not allowed. See, everything I explained, in sums we are just seeing the application. So expenditure deduction not allowed. So I will ignore the expense. This expense I will ignore. See, I will put a cross mark here. Ignore the expense. And on full 40 lakhs royalty, tax will be 20%. Then there is one more thing, fees for technical service. But see, here it is provided by PE in India. And if you remember, if royalty and FTS is routed through PE in India, then the tax will be normal rate. So here in the question, the given fees for technical service is routed through PE in India. Then tax will be normal rate. What is the normal rate of tax for a foreign company? 35%. And expenditure deduction will also be allowed. See, if 44DA becomes applicable, you will be taxed at normal rate subject to all deductions. So tell me here, what will you write? 44DA, normal rate 35%, and deduction of expenditure will also be allowed. So in short, there are 4 incomes. And you know, while tax calculation, every income which has a different rate, you will prepare a separate column. You know, if you remember Satak, Latak, winnings balance, Satak, Latak, winnings balance, that time only Satak, Latak, winnings, you felt it has a special rate. That's why we made a separate column. But actually the rule says what, you know, whenever any income is subject to separate special rate, you have to prepare a separate column. So Earlier it was just casually Satak, Latak, winnings, balance. But it's not just Satak, Latak, winnings, balance. Any income which has a special rate, you will prepare a separate column. So see here, tax calculation I have done column wise. And all incomes having different rates. I have, see this 20% I could have clubbed. But it's okay. I have kept all 4 incomes in separate column. One is subject to 20%, other is subject to 5%, one is subject to 20%, and other one is subject to 35%. So I have applied the respective tax rate. See here. See here I have not prepared the income statement. See, whenever tax liability is there, you have to prepare the income statement. So I have directly prepared the tax calculation because income is already given computed. Na? See here computation knowledge is not tested. Incomes are given ready-made. Just apply the tax rate. Na? But see, it is riskier. What is risky, you know? Not preparing income statement. See, first do you agree? Whenever tax is calculated, first prepare income statement, then tax calculation. So here, although I have prepared tax calculation directly, but there is a risk of not preparing income statement. You know what is the risk? Because if you don't prepare income statement, you will not come to know GTI, NTI, and based on NTI, we decide surcharge. So see, here I have taken a risk of not preparing income statement, but in your mind you can mentally calculate. You know what risk? Because if income statement is not prepared, how will I figure out GTI, NTI? See, I am not interested in GTI, but NTI is relevant. Net taxable income, that determines whether surcharge is applicable or not. Okay. So here it's okay, I will manage, but I am telling you the risk factor of not preparing income statement. See, here I wanted shortcut. Directly let's calculate tax. Na? But see, just total the incomes of the question. Total up. Look at this. Total this 4 incomes. It comes to 94 lakhs. Thank God it's not more than 1 CR. Because for a foreign company, if income exceeds 1 CR, surcharge is of 2%. If exceeds 10 crores, then 5%. You remember for company surcharge is 7/12/5. So your surcharge will not come. So luckily I checked here. Otherwise, see, I will not come to know the total income size. So tell me, and see these incomes I directly copied from the summer. 15 lakhs and then 30 lakhs, 40 lakhs. This I have taken net of expense. Last point. Because when 44 DA applies, you are applying normal rate. And in normal rate, you will take net amount. Okay. So net is 9 lakhs. So just apply the rates and surcharge is not there. As we have seen, it's not crossing 1 crore. Health and education says your tax liability is this much. So this was question number 2. Okay. Then question number 3 was in homework. Question 3 was on sports person, cricketer. Australian cricketer means foreign sports person. You know this theory you will apply when? This theory, you have to check carefully that assessee should be non-resident plus foreign citizen plus either a sports person or entertainer. Check everything. NRFC, sports person, entertainer. So see in the question, David Warner, he stayed in India for 40 days. He is non-resident. He didn't stay for 182 days. Plus he is Australian citizen, means foreign citizen. So he is a non-resident foreign citizen. And cricketer means sports person. And for sports person, GA incomes are subject to special rate of 20%. What is GA? Games, advertisement, articles. So check. First income is participating in IPL. So this becomes GA income. See, I have written there GA. Means IPL is games. So for participating in game, the income which you get is subject to what percent? 20%. See, I have written 20%. Then income from articles published in sports magazine, even this comes in GA, games, articles and advertisement. And even this is subject to 20%. See, this 20% as per which section? 115 BBA. Then winnings from horse race. See, cricketer doing horse race and having winnings, this is not from GA income, na? So then it is not covered by special rate, normal rate. And what is the normal rule for winnings? 30%. So see, I have given the tag of other income, rate 30%. Then income from advertisement, this is from GA. So I have written here GA. But what will you do with expense? Not allowed. If you remember last lecture, I had given one general table saying what? Deductions are not allowed anywhere, neither under chapter 12 nor 12A, nowhere deductions are allowed. Except in royalty FTS, you get chapter 6A. So this is a blanket rule in whole chapter 12 and 12A. So looking at expense, you should remember deduction not allowed. The whole chapter 12 and 12A is on gross basis. And here what is the rate? 20%. In short, see, in the question there were 4 incomes. First, second and fourth income were GA. And third income was some other income. Now what they are asking, calculate the tax. It's simple. On first point, second point and fourth point you will apply 20%. Winnings you will apply 30%. And then they are asking one more thing. Advise whether is required to file the return. So tell me, what did I say in my last lecture? Under chapter 12 and 12A, you are not liable to file the return except in case of FII and OFO. And return filing not required is subject to one condition, that you should have only those special incomes in India on which TDS has been deducted. If in India, if you have got general incomes also, then you have to file return. So see, this cricketer has got some general income also in India, winnings. See, only if he has got special incomes which has a special rate, then return filing is not required. And for a sports person, special incomes is only GA. If he would have had only GA incomes in India, if TDS would have been deducted, then not required to file the return. But this guy has got winnings also, na, which is a general income. And once you have a general income, then you will have to file the return. See, trust me, this topic is most important and doing the homework was so necessary. I remember these homeworks were so closely connected with my yesterday's lecture. Yesterday, a long lecture was there, and immediately after that, doing this sum was worth. Plus, listening to my discussion is worth because I explained the method and the line of thinking. So, is he required to file the return? Yes, he will be required because he is having some general income also along with GA income. Then, question number 4 was homework. In question 4, it was a question on FII. Can you see FII? And once the question is of FII, what should come to your mind? Tell me fast. 115 AD. But see, be careful. Huh? FIIs are what? They are foreign companies. Huh? But they have a special tag of foreign institutional investor. But basically their structure is what? Individual HUF or some foreign companies. Foreign company. So they can also become eligible for 115A. In this question, this situation is created. See, generally what a student does, you know, once the question is on FII, they close their mind in this box, only in this box. But don't we say think out of box? See, in my box, FII provisions are there. See the box which I have done. Think out of box. And out of the box, if you see, FII are basically a foreign company. See, they have a special category of FII, but basically they are foreign company. So they can also use advantage of 115A. Like if they have given loan to IDF, Infrastructure Debt Fund, they can take 5% tax advantage. Otherwise, see, if you be so rigid with this box, look at this box. What will you do? Interest, you will always tax it at 20%. Because student will think rigidly, no sir, under 115 AD, interest is 20%. But what if that interest comes from IDF? What if that 5% possibility is created? So you can take advantage of 115A. Now you cannot say, but sir, 115A is for FCNR. So FIIs are foreign companies only, na? See in the question also. Invest Limited is a foreign company. And they have got double degree. Double degree means they are foreign company also plus FII also. So because they are FII, they can use 115 AD. And because they are a foreign company, they can also use the provisions of 115A. And if there is a clash, they can use the one which is beneficial. Like see 115 AD, what is the tax rate on interest in 115 AD? See here, it is 20%. But if you are able to get these percent, see these percent, 5, 4 and 9, why will you not take that? So see, sometimes assessee gets qualified in multiple section. So you can use the one which is beneficial. Like see one more example, look. FII, interest and dividend is taxed at 20%, correct? What if FII is invested in bond GDR? Bond GDR. So you will say, sir, but that is for NR. FIIs are also non-resident. Here, this company is a foreign company, and generally a company which is in foreign is a non-resident. So FII can also get qualified in bond GDR. So bond GDR, what is the special rate? 10%. So why will FII not take the advantage of 10%? See, if you are rigid, what will you say? Sir, but for FII, interest is subject to 20, na? See, that is a general rule. But if you can fit yourself in some other section which provides you a beneficial provision, why will you not take? In short, see, don't worry, this way there is not more confusion. Especially these two sections you should note. See, OFOs are specific people. Sports person are also specific people. NRI is also a specific person. Indian. But just see this NR, FCNR, they are general terms. And in general term, anyone can fit. Like in this NR, a sports person can also fit. Don't say, but he's a cricketer, he's NR, na? So he can, sports person can also take advantage of 115AC. What is 115AC? Bond GDR. Otherwise, a rigid student, what he will do? Sports person means he will think in the box only. In the box means see the box, but think out of box. See, for sports person, we know special rate of 20% is there, but non-resident sports person, he is basically non-resident. Being NR, he can also fit here. And he can also fit in 115A. In short, see, these two sections are welcoming anyone. Tell me which two sections? Look at this. 115A and AC. They can welcome anyone. They will not say, you are FI, go to your section. You are sports person, go to your section. Why? The nature of 115A and AC is what? Generic. See the title. What is 115A? Foreign companies NR. Is it specific to this or that type? General. Even 115AC is NR, general. Yes, 115AB is specific to OFO. Sports person is specific, FI is specific, but these are general section. In short, moral is what you know. If your FI, sports person, this special people, if they can fall in this general category, which category? 115A and AC, they can take the advantage of those section. Okay. Like see here, in our question, see the first point only. Question is of FI and see this is a list of incomes. How many incomes are there? 6 incomes. Read, first income is interest from rupee denominated bonds. Tell me, rupee denominated bonds. Look, if you just focus on the FII section, look here, look. Then you will think what? In FII, interest income is 20%. And in our question it is interest, so you will take 20% only. But for rupee denominated bonds, there is some special benefit in 115A. So why will you not take? You know what is the special benefit in 115A? I will show you. Look here. Look. If rupee denominated bonds you have invested between 1/7/12 to 30th June 23, you will be taxed at 5%. And see, in our question, the investment is between 1/7/12 to 30th June 23. You saw the date of investment, check. Invested in April 2022. So that means it falls within 1/7/12 to 30th June 23. And in the question they have given rupee denominated bonds. Yes, approved by government, not given. We can assume approved by government. So I will take 5% tax. Now don't say, but sir, this is for only FCNR. So what? FIIs are special, but basically their structure is a foreign company, na? So if 5% is beneficial, why will not they take? See, if you stick to FII section, FII's general interest income is subject to 20, but why will I pay 20% tax when I am allowed 5%? Okay. In short, in the question of FII, don't just stick to FII. If that FII can fit in other beneficial section, you can take the benefit. So see here what I have written. 5% tax according to 115A. Tell me, what if the investment date was after 30th June 23? After 30th June 23, then 5% is not applicable. Then 20%. Then 20%. Then 20% not attractive. Anyways, for FII, 20% already there, na? Okay, what if these rupee denominated bonds were listed in IFSC stock exchange? Then you would have taken 4% instead of 5. Why 4 and what? Why not 9? Because of the date of investment. See, rupee denominated bonds listed in IFSC stock exchange, 4 and 9 also depends upon date of investment, isn't it? But here listed in IFSC was not given, so I have taken plain 5%. Then interest on debentures of Indian company. Now this I will figure out in 115 AD only, because interest on debenture doesn't have any some attractive thing in some parallel sections. See, my eyes are there on the other section like 115A. There is no something attractive for this point, na? Which point? Interest on debentures. So I will just apply the regular rule of 115 AD. What is the regular rule? Interest income, dividend income is subject to 20% tax. So I will apply 20% tax as per 115 AD. See, I have written here 20% tax as per 115 AD, even for dividend income. Here, interest and dividend both is subject to 20% tax for FII as per 115 AD. So I have written 20% for both. See here. Then what about short-term capital gains? Tell me, what is the rule for short-term capital gain of FII? Here, can you see asterisk? Asterisk means if STD paid, then 20%, otherwise 30. So check, is it STD paid? See, the sale is through recognized stock exchange, so STD paid. So STD paid means 20% you will take. If STD not paid, then I will take 30%. So here STD paid 20%. See, there is one more short-term gain. But here, because it is bonds, on bonds there is no STD, na? There is no STD. So this is non-STD paid. For non-STD paid 30%. So I'll apply 30%. But you know, your eyes should go into this chart only if it is security oriented. Huh? Be careful. What if FI sold some land? See here, Satak Ji has come from bonds. Bonds is securities. That's why I followed the rate of 30. What if the short-term gain was arising from sale of land? Does land come in the chart of 115 AD? This is only for securities income. So this way they fool in exam. Question is of FI, but they have sold a land. And here only security oriented things are special treatment. Okay. So what if it's a sale of land? Special provision will not apply. Then go as per general rule. Short term gain, normal rates for foreign company 35%. Foreign companies are subject to 35%, so you'll apply 35%. So that care you have to take a. Here it was luckily bonds. So bonds means securities. So it is fitting here. And I took 30% because it is fitting in 115 AD. The next point is long-term capital gain on sale of land. So here it is land. Here it is land. So tell me, will I use 115 AD? Say no. Because 115 AD is for security oriented income. It is land. So don't use this chart. To hell with this chart. In fact, none of this section apply. Nowhere land provisions are made by the law. So apply general principle. What is the general rule when someone sells land and makes long-term gain? The long-term gain general rule is what? 12.5% tax. If someone has paid STD, then 12.5% after exempting 1,25,000. Land STD is not possible, na? So it is plain 12.5% tax. Sorry. Here by mistake I wrote 115 AD. Here it will be plain 12.5% tax on sale of land. Wait, 12.5%. And is it as per 115 AD special section or general provision? General. 115 AD special provision applies when securities income is generated for FI. Then calculate the tax liability. See, I have prepared income statement also here for safety. Because what if the income crosses 1 CR, I have to take care of surcharge also. So see here what I have done. In the question, if you see, there was one special income of 115A, then 3, these points were 115 AD. And then there was general long-term capital gain. So see how I have classified. One income of 115A. Okay. Then few incomes were there from 115 AD. And there was some general other income, that long-term gain from land. Okay. So tell me one by one what will come. What was there from 115A? Rupee denominated bonds. See, I have written here. Check the answer also. Rupee denominated bond. What was the amount? 16 lakh. These are incomes. Huh? Then what was there from 115 AD? Tell me here. From 115 AD we had interest on debenture, dividend and short-term capital gain. As well as this thing. Short-term capital gains. 2 short-term gains. Interest, dividend and 2 short-term gains. Interest, dividend and 2 short-term gains. They are all from 115 AD. Amounts I have directly copied from the sum. Then there was some general income not fitting in 115 AD, that land long-term gain. That was 10 lakhs. So I have simply classified the income systematically. Now what are the rates? Rates we already written. Wait, before that, what is the total? Gross today income? 98. NTI 98. So it's not crossing 1 CR, so surcharge will not come. Surcharge will not come. Then how to calculate the tax? Just apply the respective rates and number of rates, number of columns. Here how many rates are there? 5%, 20%, 20%, 30%, 12.5. So for each rate you will prepare a separate column. So see how I have done the presentation. First I have written that rupee denominated bonds separately because it is subject to 5% tax rate. Okay. Then interest and dividend I have clubbed because both are of similar genre, interest, dividend. So I have clubbed and kept at 20%. Short-term capital gain, one I have kept separate, other I have kept separate because both have separate rates. So see here, interest dividend clubbed together, short-term gain, and at the end there was some general long-term gain. Amounts are from the question. Now apply the rate. On this 5% rate, on this 20% rate, and on this equity shares, STD paid short-term 20%. And this was non-STD paid. But FII has a special benefit of 30%. See, generally non-STD paid Satakji is 35%, means normal rates. But for FII, there is a benefit that if there is short-term capital gain, even if non-STD paid, you have to pay 30% tax, whereas they are foreign companies, they should be paying 35%. But here it's concessional 30%. Then long-term capital gain, general 12.5%. So all taxes I will add together. There is no surcharge, health and insurance, and so on. This is the answer. So these were the 4 homework questions which I discussed. Okay. See, since I am genuinely discussing each homework question, feel your duty to honestly do all the homework questions before you start a new video. Now continuing further. Okay, now see, in NR taxation, part 1 we have done. First section, special rates. Okay. Now the next section is presumptive taxation for non-resident. There are few sections providing for presumptive taxation for NR. See, earlier in PGBP chapter, we had studied about presumptive taxation. But they were about resident people, like transporters and professionals. But now there are some special presumptive schemes for non-resident. See, what is that? Look here. See, there are in all 6 sections of presumptive taxation. 1, 2, 3, 4, 5, 6. And you know what is the common thing in all sections? First understand the common thing, a common thing. All these sections say that whatever is your gross receipts in your business, certain percentage of that you have to declare in PGBP. Presumptive. And presumptive means government is presuming that whatever is your gross receipts is kind of your turnover only. Whatever is your gross collection in your business, certain percentage of that will be assumed as your net profit. That you have to show it in PGBP and your income is calculated. See, generally for PGBP, you have to do a detailed working. What is the format of PGBP working? Net profit as per P&L account, add disallowed expense, less non-business income, less unrecorded business expense, add unrecorded business income. We do detailed working of PGBP. But this section says no need to do detailed working. We will presume that out of your gross receipts, certain percentage is your profit. And on that you have to pay the tax. Now what is the logic behind this? Logic I will explain. But first understand the theme of these 6 sections. Okay. In short, see here again you will have to buy at certain percentages. Still I have not explained the logic of why presumptive section for these under these cases. Logic I will explain, but ultimately you will have to buy at some percentage. Let me start with first section so that you will get more clarity now. See, there is one section 44B. It says if non-resident has shipping business in India. See what I have highlighted. As per 44B, if a non-resident has shipping business in India, so whatever collection he gets in shipping business, 7.5% of that will be assumed as his profit. Means his ships are sailing from India to foreign, foreign to India, India to foreign. And what collection he gathers in India? All his gross receipts. Out of that, 7.5% will be assumed as profit. You know, when law says 7.5%, indirectly what they are trying to say, that if the customer gives you 100, we assume 92.5 is expenditure. and your net profit is 7.5. Tell me, what is the revenue for shipping business? Like if in shipping business some company says we want to transport the cargo from Mumbai to Australia, means they are wishing to transport their cargo from Mumbai to Australia. So what revenue shipping company will get? They will charge freight. Freight is their income. For shipping business, the main freight what they charge, it is income. And gross means from the freight, don't deduct any expenditure. Keep the freight as it is. Of that, calculate 7.5%. 7.5% means we think that whatever freight we have charged for transporting their cargo from Mumbai to Australia, from that 92.5% will become your expenditure. Because see, net PGBP tax is on net profit, and net means net of expense. So in every business there is expenditure. So we presume the expenditure is 92.5, and after cutting 92.5, your net profit is 7.5. But why like this? See, this is a rule. You have to buy at 7.5. Buy at 7.5, 7.5, 7.5. Means whenever in the question there is a non-resident carrying on shipping business, what will you do? You will just multiply 7.5% of the gross receipts, and that amount will come in PGBP. You know, many students, what they misunderstand, we have to pay 7.5% tax. See, this is not tax amount. This is profit percentage. Tax is also as per the rate, but this is not the rate of tax. This is the percentage of profit, and this will be written in the 5 heads of income. Tax is calculated when? At the end. And here tax will be as per normal rate. Means if shipping business is done by a foreign company, 35%. A foreign partnership firm, 30%. A foreign sole trader, slab rate. See, this is not the rate of tax. If someone says, sir, how much tax we will have to pay? That depends upon the type of the assessee. If you are a foreign company, then 35%, individual, then slab rate. But tax calculation comes at the end. This working we are showing in PGBP. You know why I have to stress? Because in my previous session also, we have studied so many percentages. But they were tax rate. But now the percentage which you have to learn is the tax rate or profit percentage. So don't mix up. See, for clarity I have written something here. See, you understand what I am trying to show? Tell me, 44 is targeting PGBP working. Although it is percentage based, but that percentage is your PGBP. And what was 115, which we already studied? In my last discussion, we did various 115. So 115 we're talking about PGBP percentage or tax rate? Tax rate. So don't mix up, because ultimately as a student you will think several percentages you have to remember, but sometimes you yourself get lost. You don't understand what is the percentage of tax and what is PGBP. So whole 44 is about PGBP percentage. Okay. Now tell me, what is the logic of 7.5%? No, but why this system? Why presumptive scheme for shipping business? So see what happens, in real life, this shipping business is basically of non-resident. Let's assume some Australian company is a shipping company, and the company is Australian, but their business is spread over the world. India is not the country from where they are getting the revenue. India is not just the only country from where they are generating the revenue. The company of Australia might be getting revenue from London, they might be getting revenue from China, plus India also. But Indian government will tax which revenue? Indian revenue. So it becomes difficult to find out what revenue they generated from India. See, first visualize the main NR which I am talking about is located in Australia, and they have got a large scale business spread over the world. I mean, their ships are not just running from Australia to India. It goes from Australia to London, Australia to even US, South America, Hong Kong, China. Means his business is spread across the world. That means revenue is generated from across the world. But is income tax department interested in the worldwide revenue? See, they are Australian people. We can tax them only for Indian revenue. But to find out their Indian revenue, it becomes difficult sometimes. So for simplicity, this system is made. Here, you know what is the simplicity? See, we don't have to separately calculate the profits of Indian operation. See, otherwise imagine that Australian people, if they are asked to calculate the profits of their Indian operation, so imagine their operations are spread across the world. Now figuring out the profits of Indian operation will be so difficult. Tell me why I am behind profits of Indian operation? Because India will tax only on profits of Indian operation. But to calculate that becomes difficult. That's why one simple method. So you know what government of India says? See, Australian people, don't worry. We understand your business is spread across the world. For India, we will do one shortcut method. Whatever gross receipts come through Indian land, just calculate 7.5%. We'll assume that is your net profit. The percentage you have to apply because gross receipt is my full revenue and tax is on the net profit. To make it net, we apply some percentage. And purposely, you know, government has kept the percentage on lower side so that all these foreigners will happily accept. Otherwise, sometimes they take it negatively. See, imagine if this percentage would have been kept on a higher side. These Australian people, they might have felt what? That Indian government wants to take more tax from us. So that's why, you know, we are trying to say, see, Australian people, we want to simplify your taxation. So don't worry, you just have to report 7.5% in India. And purposely such a low amount is given so that they are inclined and they accept the rule positively. See, government is making the rule, but they should also accept the rule positively, na? So this is the logic. So see, same logic applies in all 6 sections. Now what will be the change? Business type will change, percentage will change. But if someone says, sir, what is the logic behind all 44s for NR? The logic is simple. Their business is spread worldwide. But India cannot tax the world profit. India can tax only profits of Indian operation. And finding profits of Indian operation will be difficult. That's why shortcut. See, presumptive is giving you a shortcut only, na? And shortcut is needed because it is very difficult to identify profits from Indian operations. Okay. In short, by heart 7.5. See, logic is just for our satisfaction. Eventually, you will have to by heart 7.5%. Okay. But for airline business, now imagine there is some company from Japan. In the example earlier, Australia, I said now Japan. Japanese company, they are running airlines. And their airlines, they come to India also. It goes to US also. It goes to New Zealand also. Again, same logic. Their business is spread across the world. But can government of India tax their world profit or only Indian profits? Indian profits. And to calculate Indian profit will be challenging. That's why shortcut. And what is the shortcut? 5% of gross receipts. Means if the Japanese airline has generated gross revenue of 2 crore from India, so 5% will be assumed as the profit. Means we assume 95% should be your expenditure. So 5% is your net profit. Just report 5. And why a lower percentage in aircraft compared to shipping? Because in aircraft business, the overheads are higher than shipping. So if for shipping, government is saying 7.5, for airline business, it has to be less. Because the margin is less in airline business compared to shipping. Then, this was which section, you know, 44. BBA. And what was shipping? 44B. Then see, next section is 44BB. This is for a non-resident who is helping mining business of India. See, imagine a company of foreign, they are helping our India's ONGC. What is ONGC? Oil and Natural Gas Corporation of India. See, ONGC I am just taking as an example. I mean to say, imagine someone of India doing mining business. Now tell me, what is a challenging mining business? You tell me, otherwise I will not be able to explain. What is the main challenge in mining business? Two challenges. First, we have to search where the minerals are, because you cannot start digging any ground. If you keep digging any ground, you will keep digging, nothing is found under the ground. So first challenge is to search where minerals are available. And then second challenge is, once you find the minerals, you have to extract. And for both these activities, foreigners help India. Like if you want to search where the minerals are, because earth is so big. Even in India, the land is so big, but where you will find the minerals? Because minerals are found under the ground. So searching the mineral is a technical job. But for this, foreigners help India. And once we find the mineral, we have to extract. You understand, extracting the mineral from under the ground is so difficult. You require huge equipments. Indians do not have that equipments. We hire from foreign. In short, I am trying to say, in mining business, foreigners help in two activities. Activity 1, searching the mineral. Activity 2, extracting the mineral. For these activities, who help us? These non-residents. So when they help us, we have to pay. And when we pay, it is a payment for us. But for them, it is a gross receipt. 10% of that, they have to report in India. 10% of gross receipts. Tell me why 10%? Because when these foreigners help Indians, so they might be charging good amount, but they have their expense also, na? Like they give us big equipments to extract the minerals. So that equipment is costly. They have to bear the depreciation of that. They have to maintain the equipment. So whatever they charge from India cannot become their profit, na? So if they are charging 100 from India, their profit will be assumed as 10 only. 90% assumed as expense. And see, these people, again same logic. They might be providing mining services across the world. But government of India can tax only on Indian operations. And Indian operations can be calculated in a shortcut manner. So tell me, here I have written what? Helping mining. Who is helping? That non-resident sitting abroad, maybe in China, Japan, they are helping. Helping whom? Mining business of India. Helping for what? Helping for what? Searching minerals and extracting minerals. You know what is the meaning of searching? Prospecting. In my printed book, you will find the word prospecting. Prospecting means to search where the minerals are. Prospecting and extracting. So you are getting the help for prospecting and extracting. Okay. Then, now imagine some foreign people, some non-resident, they are helping power business of India. Just the way they were helping mining business, now they are helping power business. You know what help power business require? See, power generation requires huge plant and machinery setup. So that plant and machinery installation work is handled by NRs. Because Indians are not equipped to install the whole plant of power generation. See, power generation sounds very simple, to generate the electricity, but that electricity generation work requires a huge setup of plant and machinery, and that setting up thing India is not capable. So generally we take help of NRs. So when these people help, they will charge and we will pay, and what we pay, it becomes their gross receipts. 10% of that they have to report in India as profit. Again same 10%. See, every explanation what is changing, percentage and the type of business. So tell me one by one. Here what was NR doing? See, in every point you try to understand what is NR doing. See, NR is getting income, but by doing something. So tell me one by one. Here what is NR doing? He is doing shipping. Here what is NR doing? He is doing aircrafting. Now what is NR doing? Helping mining. Then helping power people of India. So this NR is doing, and if they are doing, they generate revenue from India. But full revenue cannot be taxed. They have their expense also. So percentage of that. Then one more thing NR is doing. Cruising, cruise shipping business. Imagine some NR from Bangkok or Thailand or Pattaya, Phuket. They are having cruise shipping business and they are running cruise ships in India. Then the percentage is 20%. What is cruise ship? See, this shipping business was shipping of cargo, goods. But this is cruise shipping is, see, in normal shipping also there is goods and passenger. But here only passenger, and the passengers are commercial or leisure tour. It is for leisure. It is tourism. This is personal travel for leisure purpose. See, in normal shipping business also goods travel, passenger travel, but that is commercial. That is fully commercial. Like some passenger have to commercially go abroad or some goods have to be transported abroad. So that is commercial shipping. But this is purely for tourism. You know, have you gone for a cruise ship? If you go to a cruise ship, it is not like a normal ship. That ship is like a 5-star hotel. You will feel as if actually you are in a ship. But once you enter, you will forget that you are on a ship. You will imagine it is a 5-star hotel having all facilities and amenities. So this kind of business is also becoming popular. And you know what government of India wants? They want to popularize this business in India. So this section is recently added. Section for cruise shipping is 44 BBC. This was recently added in Budget 24. You know, in Budget 24, Finance Minister Nirmala Sitharaman said that we want to develop cruise shipping in India. Like when you go to US, you go to foreign countries, cruising is so common. But in India, cruise ships are there, but not that common. We want, because India is also having lot of water surrounded, sea. See, cruise shipping requires what? Sea water. And India is fully surrounded by sea. So India has got a good scope of cruise business. And if cruising is developed more in India, India will gain name and fame. So to encourage that, we have made a special provision that if any foreigner, see, basically you are a foreigner in this section, if any foreigner starts cruise shipping business in India, but here the ship will sail only in Indian waters. Cruise shipping means cruising only in Indian waters. Then what will be the tax? 20%, sorry, not tax, by mistake I said. What will be the profit? 20%. 20% is not a tax rate. See, by mistake I said. 20% is assumed as a profit. 20% how to calculate? If they are getting collection of say 25 crores. 25 crores they have charged from each passenger who want to enjoy the cruise. So 25 crores from all passengers, from all passengers. So of that 20% will be reported in PGBP. Tell me here why the percentage is big? Because here the margins are high. In commercial shipping, these companies hardly earn something. But in cruise shipping, the margins are high. That's why 20%. You know, these 4 sections are very old. But cruise shipping section came when? In Budget 24. Now, in Budget 25, for you people, students appearing in May 26, September 26, Jan 27, what budget is latest? Budget 25. In Budget 25, one more section came. 44 BBD. That is for what, you know, if some non-resident is helping Indians to set up electronic goods manufacturing facility. Like imagine Reliance wants to manufacture electronic goods. See, electronic goods can be anything, any electronic item. It can be microwave, oven, anything. All electronic goods. So if some Indian wants to set up a manufacturing facility of manufacturing electronic goods, so we generally take the help of NRs. NRs are expert in electronic business. So imagine some NR is helping Indians to set up what? A facility for manufacturing electronic goods. So if they provide services, we have to pay charges. So whatever revenue they get from India, 25% they have to report PGBP. Here it is 25%. See, here again same helping business. See, there were 3 helping business. If they are helping mining business, then 10%. If they are helping power business, tell me what help they give in mining, prospecting and extracting minerals. What help they give in power? Installation of power plant. See, in my notes you will find the word commissioning. Commissioning is nothing but installation. See, why I am telling you this word? Because in the printed book, when you see, you should be able to understand. Na? So, in power business, NR will help us in commissioning. Commissioning means installation of power plant. Because once the power plant is properly installed, power generation can smoothly start. So, mining people are getting the helping of prospecting, extracting. Power people are getting the help of commissioning of plant and machinery. Electronic people are getting the help of setting up the manufacturing facility. And once that setup of manufacture is done, then we can easily manufacture electronic goods in India. But see, in this section, they have made one condition. NR should be providing that service to some Indian company like Reliance. See, who is availing the facility of help? Some Indian company should be availing the help facility. Help in what? That we want to set up a manufacturing setup for electronic goods. So that help who is availing? Indian company. And the helper should be NR. In every section, NR is doing something. But what you have to remember, what is he doing in India? So answer one by one. He is doing shipping in India. He is doing aircrafting in India. He is doing helping in India. Again helping, again cruising. So these are the things which is doing. See, this is a way to remember. As a student, you should remember NR is doing something in India. So what is it doing? Shipping, aircrafting, helping power, helping mining, helping electronics and cruising. For these activities, whatever revenue they generate, of that certain percentage will be reported in PGBP. See, this percentage will come and amount will appear in 5 heads. And what about the tax rate? See, for these business, there is no special tax rate. Tax rate is normal. If these activities done by individual, then slab rate. Foreign company, then 35%. Okay. So here, remembering the section is little difficult. Huh? See, when I am explaining, saying yes, 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 it sounds simple. But when you have to independently figure out in exam, you get messed up. So I will give you some trick to remember. See, there is one trick. Look, I will be repeating the whole thing, but now my focus is to explain the trick to remember. So see, what is the trick? First, I had 44. Then single B, double B. Then all are double B only. Double B, double B, double B. Then A, B, C, D. Remember like this. First is single B, then double B. Then there are 4 more double B's. But remaining double B's are with A, B, C and D. Okay. I'll do one thing. I will highlight this. A, beta. See, I am putting in black color. Then B. Then C, then D. That is the changing alphabet, correct? But BB is common. So this much you can remember. Now, 44 single B is for what? Tell me. The understanding part is done. Now we have to remember. This is for shipping business. Double B. See, after ship, naturally you will remember aircraft, na? But A for aircraft, A for aircraft, A for aircraft. So aircraft will come here. This was, you know what? Helping mining. And this was helping power. Okay. And BBC, C for cruise. This you can remember, C for cruise. See, A for aircraft, C for cruise. So this is cruise shipping. BBD, electronics. Helping, see there were three helping business. Helping. Helping means these NRs are giving such services to help Indians. But here mining business was getting the help. Here power business, here electronics. Okay. Now tell me how to remember this keyword. I have made a keyword indirectly. SMAPCE. See, remembering is important. See, I made you understand the concept. But what is the use of concept if you don't remember only? So tell me, how will you remember? How will you pronounce this keyword? See, there is a good pronunciation, but that pronunciation is in Hindi. Huh? See, in my Hindi batch I say, "Sum aapke, solution hamare." Sum aapke, solution hamare. Means a student is talking to ICAI. A student is talking to ICAI. And you know what the student is telling ICAI? ICAI, you make the questions. We will answer. You make the questions. Questions means sum. Aapke means yours. And we will give the answers. See, how does this sound come? Sum aapke. See, I have written also, look here. Sum aapke, solution hamare. But don't take the solution hamare literally. Focus on sum aapke. So sum aapke. And you know, I cannot shift the alphabet from here and there because section is in sequence. Single B, double B, then all are double B's with ABCD. So I have to keep the alphabet in the same order. SMAPCE. How do you read? Sum aapke. Okay. And in your mind it should be sum aapke, solution hamare. Okay. Then tell me the percentages. In shipping 7.5, helping mining 10%, helping power also 10%, aircraft 5%, cruise 20%, and electronics it was 25%. But see, there is one glitch in the law that this helping power is only for foreign companies. There is no intention, but sometimes you know, different sections come at different timing of budget. See, we are studying all together. But in the BEAR Act, did all sections come together on one day? No. Every section came at different time. Like this section came in 25 budget. This came in 24 budget. So every section is a different timing. And at different time, the finance minister is different. So sometimes in the drafting of the law, there comes some technical glitch. Like when this section came in India, it started with special provision for foreign company. Means there was no special logic to keep it for foreign company. But in the act, once it is printed, foreign company, then literally foreign company. You know what is the problem then? Foreign company means individuals, sole traders, partnership firms are excluded. It should be a corporate. But when I just say plain NR, it includes individual, HUF, partnership firm, corporates, everyone is covered. So actually there is no logic, but for a student it should be noted because ICAI paper setter, they have fun in testing these points. They will purposely create section 44 triple B and it will not be a foreign company, it will be some partnership firm or a sole proprieting concern to test you. So they are not eligible for this section. For this only foreign company is eligible. Then can you see two hashtags. Where I've written that hashtag? That hashtag is there only in helping mining business, helping power business. So here there is a provision saying if the helping of mining business and the helping in power business, if NR claims that our actual profits are less than the presumptive, means what is the presumptive amount? 10%, here also 10%. But they are claiming no, our income, our net profit is not 10% of gross receipt, it is less. So you can show less income, but compulsory books and audit. And this option is not available in other sections. In other section, these presumptive things are mandatory. In other section, other than hashtag points, the presumptive section is mandatory, but only in these hashtag points where helping mining and helping power is there, the presumptive is not mandatory. Assessee is allowed to declare lower income, provided you maintain books of accounts and get it audited. Okay. So this is little bit messy. The law is not that organized. See, sometimes you feel here it is like this, here it is not like this. Why? See, why these problems happen, because law is not that planned. Every year budget comes, every year some new planning comes. So sections come gradually in the law. So sometimes when you look all these sections together, you will find mismatch. You will find unorganized. But let it be. We cannot change the law. We have to accept it. So tell me, under which section you will say you are allowed to declare lower profits? BB and triple B. Helping mining, helping power. Here if assessee wants to declare lower than 10%, he can declare provided maintains books of accounts and gets it audited. See, these small points are tested. If you see past paper, if you travel through all past paper, you will notice these are tested in exam. Every point is relevant from exam point of view. So this was there. So we finished what? All 44 B's, presumptive taxation for NR. Everywhere the logic was what, these people have the worldwide business, but Indian government wants to tax only Indian operation, and to calculate Indian operation profit, it becomes a difficult task. That's why simplified method is provided. Okay. Then see one more thing. Try this example. This example has come in exam already twice, thrice, I don't know how many times. Multiple times it has come. This is a question on shipping business. If you travel through the past paper, you will see many times that shipping business question has been repeatedly asked. And few times they have asked on airline business. Remember, for shipping business 7.5 and airline 5%. These two questions have repeatedly come in past paper. And they provide the data like this. Just go through the data and try to calculate. The question is of shipping business. What you have to calculate? PGBP. See, in such question, you will be asked to calculate PGBP. These are special provisions for PGBP. So first you try PGBP in this. Assuming it's a shipping business, Try. So see here, in the question, what they given? Gross receipts is 400 crores. But see the breakup. See, if a student is not aware of what I am going to explain now, what mistake he will do? He will simply take the gross receipts, multiply by 7.5% and declare the answer. But be careful, don't forget, these are special provisions for NR. And as you know, what comes in the scope of non-resident, only Indian income. For a non-resident, anything arising abroad doesn't come in the scope of its taxation. The scope of NR is wide or narrow. It's restricted to Indian operations only. Okay. So see, use this knowledge. These gross receipts are on account of bookings made in India. Booking for what? See, we are in shipping business. People do the booking of cargo. They book space that we want to transport 100 containers, 50 containers, 90 containers. So they do the booking. So 100 crores booking was done in India. Means at Indian port, the customer did the booking, but money was received at London port. Let's assume in my example, our ship is sailing from Mumbai to London, London, Mumbai, Mumbai to London, London to Mumbai. So this 100 crores booking was done in Indian port, but money was received at London port outside India. And you know, if you remember CA Inter, you studied for NR, either the income should accrue in India or it should be received in India. Something should happen in India, then India will tax. So tell me, what about this 100 CR? It is received outside but accrued in India. So this will be counted as Indian income. Okay. So see, this I have put tick mark. Tick mark means I will count. Then what about another 100 crores? This was cargo booked at London port. Means imagine some customer came at London port, they did the booking. But customer did not pay there. We received their money at Indian port. It happens the customers are from London, but they might be having their branches in India. So from India we received the money. Booking was done from London port. Money was received in India. And what is the rule? To tax NR, either income should be accrued in India or received. Here accrual is outside. Tell me, why did I say accrued outside? Because freight is booked outside. So income has taken the berth outside, but the money is received inside. So because in, it will be counted. Then this 100 crores booking also done in India, money also received in India. So this is definitely Indian income. What about the last 100 CR? This was booked abroad. Money also received abroad. India has got no right. This because pure foreign income. This cannot be taxed for NR. Don't forget, NR is the assessee. Okay. See, this is basic rule of CA Inter. If you remember, I am explaining. The best is what you know. Once in case of NR, you find something is accrued also outside, received also outside. See, both the thing outside. Just ignore that. But any one thing happening in India, either accrued or received, it will be counted Indian. So tell me finally, how much is Indian gross receipts? 300 CR. So your PGBP will be 7.5% of 300 crores. This will be my PGBP. Where will this amount go? This will go in 5 heads of income. And what will be the tax on this? Tax will be normal. See, these are special provision for computing PGBP. If someone say how much tax will have to pay, depends upon who he is. If he is a sole proprietor, then slab rate. Foreign company, then 35%, depending upon the type of the assessee. But PGBP will be calculated in a special manner. Trust me, this is very important. Why I am giving so much importance? Not because it is tough. It has been repeatedly asked in past papers. Okay. Then, yes, but it should fit now. See, his doubt is what you know. If you fall under 44, can you use 115 provisions also? See, 115 provisions is for selective income. 115. 115 is for what? FCNR having income like interest dividend, OFO having units income, NR having bond GDR income, FII having security income. See, this and what I am explaining is anyways not clashing. This is a different world of business. And what was taught in 115, there was a different world. And one thing, if you see, they were all passive incomes. They were all passive means what? You don't have to work, you have to invest, sit and earn. See, these were all passive incomes, and none of this income anyways clash in 44's presumptive. So in case you are thinking in a question both will come, it will not clash, na? And 44s are passive income or active income. Here actively NR is working. He is generating revenue from India. These are active incomes. Yes, you can create a situation like some non-resident is having shipping business also, plus they are recognized as FII. They can have double degree. See, they are basically into shipping business, but they are also recognized as FII. So if they have FII types income, then FII special provision will apply. But very rare. In exam, trust me, if they create a question like this, they will purely test on 44. And if they want to test on 115, the atmosphere of the question will be totally different. FII, OFO, sports person, like that. Here I have written one thing. The gross receipts which you have to take here should be read. Either it should be accrued in India or received in India. Something should happen in India. That's what I did here, na? Either it should be accrued in India or received, or it should be both in India. Okay. Now see, one thing is remaining. See, this cruise shipping business, there are some extra points you have to study in cruise shipping. See, for cruise shipping, what is the beneficial provision? That cruise company has to report in India how much? Whatever collection they get from cruising, 20% they have to report in PGBP, correct? But it is subject to some conditions. It is subject to some condition. The condition is PUCTUM, PC term, okay. P stands for it should be a passenger ship, not a cargo ship. This is condition for the namesake. It is understood. Cruise shipping, cargo is not carried, only passengers are there. But Act has clarified that cruise shipping should not carry any cargo. It should carry only passenger. It is for tourism purpose, leisure. It is for leisure purpose, okay. Then second condition, the size of the ship should be minimum 75 meters. Minimum 75 meters long ship should be there, or it should have capacity of more than 200 passengers. This is second condition. C for capacity. It should accommodate more than 200 passengers at a time in the cruise. Or the length should be, see, this is either or, any one thing should be satisfied. Either it should be able to accommodate more than 200 passengers at a time, or the length should be greater than equal to 75 meters. Means basically government wants it should be a big ship, not a small ship, just name in the name of cruise, a small ship is sailing in India. It should be a big ship. Then what is the keyword? P for passenger ship. C for capacity. T stands for it should touch minimum 2 ports. See, that cruise ship is sailing in waters of India, Indian waters. But in India, there are many ports, port at Goa, port at Mumbai. So it should touch minimum 2 ports. Or it should touch the same port twice. In 2 times, it has to come to a port. It should not happen that it is just sailing in the water only. See, what is the condition? It should be touching at least 2 ports. So from Mumbai, it has left. So it should touch Goa, it should touch Trivandrum. Minimum 2 ports it has to touch while sailing, or same port twice. Like in Goa it has touched, then again by sailing again they are touching Goa. So either touch the same port twice or touch 2 different ports. This is a condition, because then only we say it's a long trip. See, cruising should not happen. Okay, come everyone on the ship and within 10 minutes they are going and coming back. It should be a long sail. Okay. Then last condition is M. It should operate as per Ministry of Shipping. M for Ministry of Shipping. The cruise should operate as per the rules and regulation of the Ministry of Shipping. See, this condition can come as a straightforward theory question. Huh? What was the keyword? PCTM. P for passenger ship. C for capacity. T for touching minimum 2 ports or same port twice, and M for it should operate as per Ministry of Shipping. These are the special conditions under 44 PBC, cruise shipping. Okay. But for all other business, there was no condition, nothing like that. Huh? Only here there was some elaborate conditions which government has made. So, finally we finish what? We finish the second section. First one was special rates, that is already done. Second is presumptive taxation, even that is done. Next in order I will take residential status and this section 9. This is very important. See, resident status means resident status of a company. See, there is resident status of individual also. But you know what I will do? Residential status of individual. For that I will give one video of my CA inter batch. Because there nothing is new. And mainly it is less tested in exam, but for safety we need to do. You know what I am talking about? If a person stays in India for 182 days or more, or if not 182, he should stay in India for 60 days in the current year and preceding 4 years 365 days. And then there is a concept of ordinary resident, not ordinary. These are the same concept which you studied in CA Inter. So what I will do, I will give you my CA Inter video. So when I upload that video, you will find the explanation is going little slower because it is CA Inter explanation. I will try to edit and cut short it to make it final specific, but it will go at a slower pace because it was taught in CA Inter batch. And same video I am giving, it will be roundabout, say, I think around 1 hour video is there. In that whole residence status of CA Inter will be recapped. Okay. Right now, which residence status I am going to take, company's residence status. See, mainly in CA final, corporates are important. How to decide status of a company. And what video I am going to share, that is video of individuals, where you have to check 182 days. That video I will put directly. So now I am taking, see, I am skipping this for the timing. This I will take it later. After first, second, I am directly going to the third and fourth section. Sorry, fourth and fifth section, residence status and section 9. Okay. Can you see this word poem? This is a very important concept in CA final. See what is that? Look. See, all this you will be given video. Stay of 182 days. I will give you video of CA Inter. With that you can manage. Okay. See, these things are such we cannot skip also. Although these are inter topics, but we cannot skip. But at the same time we have to do also. So I will give you the video for this. So now I am going directly to this concept. Residential status of a company. This you didn't study at CA Inter level. Okay, see here. For a company, first you have to check whether it is Indian company or foreign company. That depends upon incorporation. So whenever a company comes to you as a client, you will first ask where you are incorporated. If they say it was incorporated in India, it becomes an Indian company. Indian company is always resident. And you know what difference it makes once you are a resident? Once you are a resident, you have to pay tax on world income. World income becomes taxable. So see, make a thumb rule. All companies incorporated in India, they are Indian and all Indians are resident. Okay. Even if that company has got all its operation in Dubai, once your incorporation is in India, you are not understanding importance. Importance is given to incorporation. Once your incorporation is in India, even though you run all your operations in Dubai, you will be resident because of your incorporation in India. But tell me, what about those who are incorporated abroad? Then they are basically foreign company. And foreign company can be resident also. It can be non-resident also. That depends upon the place of effective management. This is called poem. See the chart. Look at the chart. If the poem of foreign company, poem means place of effective management, is in India, then they will become R. And if the place of effective management is outside India, they will become NR. And what difference it makes? If you are NR and if you are R, what difference it makes? If you are R, world income will become taxable. And if you are NR, only Indian income will be taxable, foreign income will be exempt. So I hope this chart is clear. So see, this gives you one clarity for sure, that foreign companies can also become resident. This is a new development. See, generally what image you have, foreign companies are NR. Correct. Generally, foreign companies are NR. But sometimes foreign company can also become resident if their place of effective management is in India. See, what is place of effective management? There is a detailed explanation for that. See the next page. In the next page, I will explain in detail what is poem. Right now, you just remember from the surface level that if foreign companies' place of effective management is proved in India, they will be called resident. And you know, being a resident is a terror for them. Why? Because if a foreign company is called resident of India, they have to report world income in India. Even foreign incomes they have to report in India. And many times they are doubly taxed. Why doubly taxed? Foreigners have income abroad, but they have to report world income in India. So they will report their foreign income also in India. So they will be doubly taxed. And for double tax, they will have to do special efforts to claim the relief. Means it is torturous in short. See, if you are doubly taxed, tell me why question of doubly tax came? Because see, if a foreign company becomes resident, you have to pay tax on world income. World means it will also include foreign incomes. And on foreign incomes, you might already paying tax in foreign. And again showing in India also because world income. So this creates a situation of double tax. And for double tax, no doubt you will get some relief. Your double will become single. But it is not that easy, na? You have to do some, there are some calculations, etc., some formalities you have to do. So it is a tedious job. So in short, what I want you to feel, that for a foreign company being a resident, it's a torture. When will foreign company feel good? If they have the status of NR in India. Because if they have the status of NR in India, they have to do reporting of only Indian incomes. That is good for them. Anyways, this is all about foreign company. What about Indian companies? They are always resident. Okay. Now see, actually speaking, this theory is over. Here nothing is to be explained for Indian companies. Foreign company, what I need to explain now? How to decide whether the poem is in India or outside India. So see, my next slide will start with foreign company. Why foreign company? Because it is only for foreign company it is relevant to decide, na? So see, for foreign company, how to decide whether their poem is in India or outside India. So see, first we have to check the turnover of foreign company. If the turnover of foreign company is up to 50 crores, then poem is a place where key decisions are taken. Key means important decisions for operating the business. Wherever this foreign company takes important decisions, we say poem is located there. That means, see, for example, there is a foreign company of Switzerland, there is a foreign company of Switzerland, but all their important decisions are taken in India. So what will people say? It's a Swiss company, but decision making is done in India. So their effective management is in India. Feel the word place of effective management. Management is decision making. So if a Swiss company's decision making is happening in India, decision means not routine decisions, key means important decisions. All the, see, appointing a staff, taking a place on rent, these are routine decisions. If these routine decisions are happening in Switzerland, let it happen. But all important decisions are taken in India. So what will people say? That Swiss company's place of effective management is in India. Then it becomes resident of India. In short, you have to see the place where key decisions are taken. But this is for a company having less turnover, not more than 50 crores. But for a company having huge turnover above 50 crores, then there is a different test. Now we will not see the key decision making place. You know what will we check? There is one test, active boy test. There is one test called active boy. If this test is passed by foreign company, they will win. They will get the status of NR. See, first keep in mind, foreign company will love NR. They will love being NR. Okay. And if you want to be NR, you will have to pass which exam? Active boy. What is active boy? I will explain. This is one test. If the test is passed, foreign companies will be happy. Yes, we will become NR. Tell me what is bad for foreign company? Becoming a resident. Because they will have to pay tax on world income. That is bad. And that bad thing will happen when? If they fail in active boy test, then they will get the status of R. Okay. So in short, now we have to understand what is this active boy test. So see, full form. Active boy means active business outside India. Feel the word active business outside India. Means once it is proved that foreign company is a company of foreign and their business is also actively outside. Feel the word active business outside. See, foreign company is of foreign, and if their active business is also outside, so we get complete feeling of outside. So we call them NR. Tell me, you are getting feeling of outside or not? Firstly, foreign company because its incorporation is in foreign, and their active business also. What is the full form? Active business outside. So the feeling of outside makes us feel they are outside people, they are NR. But when do we call their active business outside India? See here. There are 4 conditions. There are 4 conditions. If all the 4 conditions are satisfied, they will pass which test? Active boy. And passing this test is good for them, they will become NR. Check what is the condition. First condition is what? Their passive income should be less. I mean, they should have more active income. See, what is the name of the exam? Active boy. So you should prove that we are having active incomes. That means your passive income should be less. Can you see less than sign? Less than 50% of your total income. Like see, if your total income is 100, passive income should be 50 or less. It should be on lesser side. What do you mean by passive income? Income where you don't have to put any efforts. It's investment income. Like see, if I invest in some property and I simply earn rent, it's passive income. If I invest in shares of a company and I enjoy dividend, it's passive income. Passive means sitting at home you get the income without any work. And which income comes in passive income? Interest income, dividend income, rentals, royalty, where you don't have to work daily. Like see, when you are doing a job, you have to daily go to office. When you are doing business, you have to daily go to your own office. So they are active incomes. So your active income should be more. What should be less? Passive income. Okay. See, I will give you one exact meaning of passive income. Right now, take it casually. Passive income means income which is generated without working. Just by investing here and there, you can get the income. Even capital gain is passive income. In capital gain, what we do? You already have the property. Just sell it. You make the profit. Then, second condition. Assets in India should be less. So, where your assets should be more? Outside. See, foreign company is basically of outside, na? So, in India, they should have more asset or less. Can you see the sign? It's less than sign. Because in India, they should have less assets. So tell me, where are the majority assets? Outside. So see, slowly you're getting the feeling. Active, see, my passive income is less. So what is more? Active. And my assets in India are less. So where my assets are more? Outside. So see, I am passing this outside also. See, go by the name, na. Like if your degree is chartered accountancy, you have to pass accounts. Accounts. So like here the degree is what? Active. So you have to show active income is more. And then what is the full form? Active business. Outside. You have to show outside is more. That means assets in India, machines in India are less. Number of employees also are less in India. I hope you are seeing this less than sign. In India less. So where it is more? Outside. And see, number of employees sometimes can give you wrong idea. Like see, a company might say, we have got 100 employees. In India, we have got only 5 employees. In India, only 5. 95 are abroad. In India, only 5. So it looks like you have passed the test. In India, only 5 employees are there, na? Out of 100. But in India, out of 100, those 5 employees are getting salary in crores. And those 95 working abroad, they are getting few lakhs. So weightage of India has increased. So see, along with the number, payroll also matters. Payroll means the salary paid to the staff. See, in terms of number also, in India, the employees should be less in number. And in terms of their salary cost, in India, the cost towards salary should be less. In short, why I want everything should be less in India, less in India. If in India less, more is in outside. And if you can prove you are mainly outside, you will get the tag of NR. See, I want you to understand with the logic, feel. So see, if you literally feel the word active business outside, you will automatically understand. So to prove active, you have to show your passive income is less and your active income is more. You know, there are some companies, they don't do any manufacturing, nothing. They invest and they sit and earn the income. They are passive income driven company. You should not be like that. You should be living your life with hard work, with active income. Little bit passive income is okay. Like see, I also do active work by teaching every day. I also have little bit passive income like interest dividend, but that is little bit, na? But your main source of income should be active. And then how to prove your business is outside? Tell me, to earn active income, what you need? To earn companies, what they need to earn active income? Machines, staff. So see, next condition is on machines and staff. Not literally machines, assets. So see, this is trying to show that first we are surviving on active income. And to earn active income, we need assets and staff. They are also abroad. So that means a company has proved that, please understand, Nirmala Sitharaman, we are people of abroad only. Give our status of NR. So in short, if all these conditions are satisfied, you have passed active boy test. One explanation is remaining. Tell me this 50% of what? Like, can you tell me exactly what is the meaning of this? Number of employees in India should be less than 50% of total employees. See, everywhere 50% of total. Like this is 50% of total income. This is 50% of total assets. This is 50% of total number of employees. This is 50% of total payroll expense. Less than 50% should be in India. More should be outside. Tell me, what is the meaning of passive income? It includes, look, one important point will come, interest, dividend, rent, royalty, capital gains, and sometimes purchase and sale of goods also becomes passive income. This sounds little weird, na? Because generally when I have to buy the goods and I have to struggle to sell the goods, it looks like active. But if goods are purchased from A, sold to A means associated enterprise. Means this foreign company job is what they are not doing normal purchase sale. They purchase goods but from associated enterprise and they sell it to some other associated enterprise. Means this foreign company is playing the role of a mediator. Sometimes there is a big multinational group. And what is the role of this foreign company? To buy from associated enterprise and sell to associated. Then dealing in goods also becomes passive. Because you don't have to deal with genuine customers and supplier. Your suppliers are AE and your customers are also AE. So it becomes a passive income. So see what is the definition given by the law. Read this. Read, this is important. What is passive income? Read. Goods income by purchase from AE and sale to AE plus interest, dividend, rent, royalty, capital gain. These are all passive income. You know why this is important for a student to learn? In exam what they do? They will not give directly passive income amount. They will give these amounts scattered and you have to literally add. Which you will add? Goods income from purchase from AE and sale to AE, interest, rent, royalty, dividend, capital gain, add all. And then you will check the total. Total should be something less than or equal to. See here there is less than plus equal to also. It is not a printing mistake. I have given purely as per the act. Here it's less than equal to, everywhere else it is less than sign. So your passive income total should be less than equal to the 50% of the total income. See, there is one question also in our book where you will use this knowledge. Till that time, just remember the provisions. Tell me what we are doing. We are dealing with a foreign company having turnover of more than 50 crores. They will be said to have poem outside when? Their poem is called outside when? If they pass active boy. Active boy means their poem is called outside, and poem outside means they are NR. It is good for them. But see, there is one more thing. Apart from passing this exam, there is one more condition. See, if active boy, yes means what? Yes means assume all 4 conditions are satisfied. So, yes, satisfied. Now you have to check one more thing. Your majority board meetings should also happen outside. Then only you are a company of outside. Then only your poem outside you will be called NR. Means passing active boy test is not just sufficient. There is one more exam you have to pass. What is that? You have to show out of all your board meetings, majority board meetings are happening in foreign land. Then only you are called people of foreign, NR. And you know one thing? Manipulating the number of meetings is very simple. Tell me this condition you can control or not. See, if a foreign company really wants to become NR, if they really want to become NR, they will arrange the board meetings in such a way that most of the meetings are abroad. See, board meetings we plan, directors. So what will we do? If we are say company of Switzerland, we'll keep all meetings in Switzerland. 1 or 2 meetings we can keep in India, but we'll make sure that all board meetings are majority abroad, so that you can show this. Means in short, passing this exam is simple, but passing this exam is tough. Tell me why this exam is tough? Because this is natural structure of the company. Can you manipulate this so easily? Means firstly, make sure your passive income is less, and number of assets means machines, building, office, furniture, computers, air conditions. You cannot plan so easily. And if foreign company has to do all that only, then why they have formed a company? See, manipulating the number of board meetings, you can easily do it. But do you agree passing this test is not that simple? Only if you are naturally like this, you will pass. This is best like CA exams. Tell me, if you want to become a chartered accountant, what conditions you have to fulfill? First, you have to pass all 6 papers of CA final. Then IT training is also important. Na? So consider board meeting as IT training. And for a student, passing this 6 exam paper is challenging. This only if you are capable you will do. Means you cannot manipulate. Can you manipulate FR, FM, DT, etc.? I will manipulate and pass. Only if you genuinely work hard you will pass. Na? So this passing active boy exam is like your actual exam paper, FR, AFM, DT. Only thing is in your exam there are 6 papers. Here there are how many papers? 4 exams. See, this is the best analogy to remember. So for CA final you have to pass 6 papers. Here how many papers? 4. But is it easy to pass? Only if you really deserve, no? But then, even if you pass all 6 exams, you will not get the degree if you have not done IT training and that GMCS, etc. That formality you have to do. But tell me, is that difficult? It's simple. So same for a foreign company also. Managing the majority board meeting outside, it's simple. So this is the best analogy. Okay. So see, once a foreign company has passed active boy, it's like, they've cleared all CA final 6 papers. Then they are almost CA. But institute gives degree when only if you have done IT training. So they have to pass this test. Then only income tax department will give them the degree of NR. See, you are craving for the degree of CA. Foreign companies craving for which degree? NR. They love to become NR in India. But for that, one exam is active boy, other exam is majority board meeting outside India. Tell me, if you fail in this exam, tell me, like in CA exam, if someone fails, then you will not get the degree, na? But such people also become successful. Like see, here if you fail this exam, means what? You didn't clear the test of active boy. Then what government will say? Okay, then we will see the decision makers. Like see, if you are not a chartered, people see your brain. Tell me, if by God forbid, if by due to some you don't get the degree of CA, then also you will become successful depending upon your brain. So now government says if active boy is not passed, we will see the brain. Brain means who is the decision maker of the foreign company. So see, we will have to figure out the decision maker. Beta. Whether the decision maker can be identified or not. See, sometimes, for a foreign company, we can figure out, oh, this is a foreign company of Dubai. But the decision maker is SHIRISH VYAS. So they will figure out who is the decision maker. They will not see the board meeting. Who is the actual decision maker? So imagine a company is of Dubai and in board of directors, any XYZ people are there. But I am the promoter. SHIRISH VYAS is the decision maker. And if SHIRISH VYAS is in India and making decisions in India, it will be called poem in India. Example, companies of Dubai, but its decision maker is SHIRISH VYAS. And where is SHIRISH VYAS staying? In India. See, my staying in India is also not sufficient. Where do I take decisions? And generally, if I stay in India, I will take all decisions in India. So, place of key decision matters. Place of key decision. Provided you can figure out the decision maker. See, DM tick means we can figure out the decision maker. Like imagine there is a Dubai company. Dubai company means a foreign company. And scrutiny is going on. Scrutiny. An assessing officer will ask, what is your turnover? They said it's more than 50 crores. Oh. And then they failed in active boy. So what will assessing officer ask? That you didn't pass active boy. So tell me who is your decision maker? So that Dubai company scrutiny, government came to know decision maker is SHIRISH. Oh, SHIRISH. He is a decision maker. He stays in India. So he is taking decisions in India. So that Dubai scope company poem becomes in India. But I can prove, yes, Shirish Vyas is of India, but I take decisions peacefully in Singapore. Then poem can become outside. But then it is very difficult to convince income tax department, because assessing officer, when they do scrutiny, they will not believe. Once they come to know Dubai company decision maker is Shirish is of India, so they will believe that decisions are taken in India only. But if I want, I can prove, and if I can prove that although Shirish is of India, but he takes decisions in Singapore, and decision making place is Singapore, then poem becomes outside. In short, it all depends upon scrutiny, how you are able to convince. But what I was trying to say, once you fail in active boy, they will target the decision maker. They will not even see the board of directors. Sometimes in a company, the board of directors are some different person, and decision is taken by some third person only, some promoter. So decision maker will be checked. But now imagine, Dubai company scrutiny is going on. Okay, Dubai company, look at the drawing. In scrutiny, assessing officer came to know their turnover is above 50 crores. So first assessing officer will try which test? Active boy. And let's assume that Dubai company failed in active boy. Means no. So then assessing officer will ask, who is the decision maker? Decision maker also cannot be identified. Means Dubai company scrutiny, assessing officer, who takes your decision? So there is nothing like fixed. We are directors, but nothing is fixed. Who takes the main decision? Nothing is fixed. Means in scrutiny, AO is not able to figure out the decision maker. Then you know what is to be done? Place of substantial activity. Then Dubai companies activities are happening where? If their major activities are happening in Dubai only, then poem outside India. Means we will see the place of, read, substantial activity. Means assessing officer will, next question will be what? If decision maker is not identifiable, they will ask for where your activities are mainly happening. So if it is happening in Dubai, then poem is Dubai. And if Dubai company's activities are happening in India, then poem in India. See, what is the meaning of activity? Law is not defined. That assessing officer will take the call. He will see where major activities of the company are carried on. And if that is also not working, they will see the place where accounts are kept, books of accounts. See, there is one more option, accounting records. See, all this tension happens in scrutiny. In scrutiny, Dubai company, substantial activity place also cannot be figured out. Then what assessing officer will say? Okay, tell me, where do you keep your books of accounts? We keep the books of accounts in Chennai. Oh, your books of accounts are kept in Chennai. So Chennai, poem is in India. See, these are the last resort. What first resort is? If they pass active boy exam, then we will decide based on number of board meetings. Okay. But if they fail in active boy exam, fail means any one of the four conditions is not matched. See, what do you mean by passing active boy? All four conditions should be fulfilled. Huh? If any one condition you are stuck up, then active boy fail. Active boy fail, then only we try to figure out the decision makers. See, here I am explaining all remote possibility, but at every point if you are feeling, sir, how will we come to know all this? See, all this happens in real life in the income tax scrutiny. Whenever foreign company scrutiny comes, what will be the first question of assessing officer? You tell me, chalo. What will be the first? He will ask for the turnover. And then if the turnover is more than 50 CR, then he will figure out the four condition. And if pass, then he will ask number of board meetings. And if major board meetings outside, then he will say poem outside NR. But if you fail in active boy, then his next question will be, who takes the decision of the company? Who are the decision makers? So if decision maker can be figured out, so we will see the place where active main decisions are taken by the decision maker. Okay. But if that is not able to give the idea, then place of substantial activity. If that also fails, then place where books of accounts are kept. Okay. Anyways, this thing which I am teaching you now, it is just to finish the theory I have to talk. Trust me, in exam, they will test on this only. These things are less important from exam point of view. It is just I cannot give you incomplete explanation. Na? I have to talk about all situation. But trust me, if you think exam oriented, in exam, you know what question they frame? They will ask whether active boy conditions are satisfied or not. Means they will test you on these 4 conditions. Means if I am a paper setter, I will be fond of asking you question on these 4 points. Because you know this becomes an interesting question. Like in first condition, I will give you different types of income. You will have to assort what is passive and what is active income and check the condition. Then assets also I can give in India, outside India. So testing this paper setter loves. So mainly this is important. And last thing which I was saying, if active boy fails, then decision maker, this is just, you can remember, but not so important from exam point of view. Tell me, this is a working for a foreign company. Did you see? See, look here. Actually, it was like this. Indian company, foreign company. Indian company job got over here only. Indian company always have a tag of resident. Foreign companies, we were struggling to figure out what? Whether their poem is in India or outside India. For this, I made a different chart. See, foreign company it starts with. So depending upon this chart, we decide whether the poem is inside or outside. If poem outside, then NR, poem inside, then resident. Poem is place of effective management. Okay. So this was resident status of a company. See here, one student had a doubt. Look here, look. That if active boy condition is satisfied, so that means we call it as yes. Then what happens? Tell me. Then there are 2 possibilities. Majority board meeting outside, then NR, because poem outside. If majority board meeting inside, then poem inside, then R. See, once you pass active boy, means once it is yes, your majority board meeting will determine R and R. And if you really want to become NR, you can make sure that your majority meeting is outside. I mean, this is manipulated. This can be manipulated because arranging the board meeting is completely in my hands. Okay. But then you don't go into this area. See, this area you go when you fail in active boy. Only when active boy no, then here. Once active boy is yes, then this thing is irrelevant. Then we have to judge based on majority board meeting. If majority board meeting outside, then poem outside NR, and vice versa. So this was residence status of a company. Now, actually residence status topic is not over. Apart from company, you need to learn residence status of an individual. But since it is inter-based, I will give you the video of inter for that. Okay. Then, after this, one more thing, section 9. Look, most important theory, this one. This we did. Next is scope of total income, section 9. Section 9. You know what does section 9 explain? When income is deemed to accrue or arise in India. In this section explains when income will be said Indian, when it is said to accrue in India. Tell me why it is important to know whether income is accrued in India or outside India. It is important for NR. It is important for NR because for NR only if the income accrues in India, he will be taxed in India. That means this section is useless for resident people. Tell me why did I say? Because for resident people like, see your sir Shirish Vyas, I am resident. For me, it makes no difference whether my income is accrued in India or accrued outside India, because being a resident, I have to pay tax on world income to India. So in short, indirectly can I say, this section is useful only for non-resident people, because only for them it matters whether income is accrued in India or not. For resident, it doesn't matter, okay. That's why see, in the title of the section only I have said, this is something special for NR. So now see, what we have to study, when income is said to accrue in India. So I'll do one thing, I will go headwise. Because we have to decide when income is said to accrue in India. So what are the types of income? 5 heads. So for each head of income, look at this arrow. For each head of income, one by one I will explain whether it is accrued in India or not. So tell me, what is the first head of income? Tell me the first head of income, income from salary. So tell me, when salary is said to accrue in India. If the job, if the services are performed in India. Look here, if services are rendered in India, we say salary has accrued in India. So what? Accrued in India means NR will have to pay tax in India. See, in every slide I have written in one corner NR. Because see this, see all these slides, look at this. See all slides. In all my slides you will find the word NR written. You know why? Understand my feeling, because I want to repeatedly tell you this is relevant only for NR. Like if a resident person generates salary income, it doesn't matter salary is coming from Dubai, London, anywhere. Resident people, they have to pay tax on worldwide income, okay. So for salary, if service rendered in India, accrued in India. But now tell me, now comes the main thing. For salary income, what if your services are rendered outside? Like see, imagine there is one non-resident, Mr. X. He is performing his duty of 9 to 6 job in Germany. He is doing the duties in Germany, Germany. So tell me, where is he rendering the service? Outside. So income is accrued outside. So it will not be taxed in India, because for NR, outside income is not taxed in India, correct? But sometimes, even though you perform your job in Germany, your salary will be deemed to accrue in India if you are on Government of India payroll. If you are in the payroll of Government of India, then even though your services are rendered in Germany, your salary is deemed to accrue in India. That means what, you know, your income will be called Indian, you have to pay tax in India. This is an exception. Only if you are in the payroll of Government of India, plus you should be Indian citizen. Like see, many times, you know what happens? Government of India, they depute our Indians in some foreign land. Like in Germany, there might be some visa office. In Germany, there is some visa office. So in visa office of Germany, Indians will sit. Because if a German wants to come to India, he needs permission of Indians. So Indians sit in Germany visa office. You know the visa office, embassy. So you know what Government of India has done? They have deputed all our Indians in foreign land. Like in Germany, imagine there is a visa office. There some Indian, Mr. Sharma, Mr. Mishra is sitting there. Why Indians have to sit there? Because if German wants to come to India, they need permission of Indians. And permission is to be taken in Germany. They cannot come to India and take the permission, because permission itself is for coming to India. So that's why, you know, this is the best example of what I was explaining, that many times Government of India has deputed our Indians to sit in Germany, Australia, Singapore in the visa offices. So imagine these people are full-time working in foreign land. Means technically their services are rendered outside, because visa office in Germany. So working, servicing is happening in Germany. But still, it is accrued in India because they are deputed by Government of India. See, there is an exception here. This is an exception. See, why I put a star? Why star? Because see, generally, service rendered outside India. So what do you feel? Salary accrued outside India, but this is an exception. Okay, now answer. Someone is working full time in Germany, but Reliance has sent him. Reliance has told that employee that you work in Germany. Is is deputed by Reliance. Then Reliance has no relevance. He is deputed in Germany. He is working full time in Germany. Services rendered in Germany. Salary accrued outside India. But only if he is working under government of India and then if he is deputed abroad. So although his services might be rendered abroad, salary is deemed to accrue in India. You know, purposely law has kept the title of this section as what? Deemed. You know why the word deemed? Because many times, actually if you see, the income is not arising in India. But this section has made deeming provision also. Like this was a deeming provision only, no? See, what did I say? To explain income accrued in India, I am taking the income headwise. And under each head, there is some typical point. Like in the head of salary, what was the typical point? That sometimes even if service rendered outside India, it is deemed to accrue in India. That was one special point. This way, everywhere some exceptional point will be important. What is the next head of income? I am going headwise. House property. Tell me how to decide house property income is accrued in India or not. Location of house. See, accrual of the income means birth. And income takes birth from the source. House property income takes birth from the house. Location of house matters. So tell me, if my house is in New Zealand and I am getting the rent, so New Zealand house based income is accrued outside India. If my house is in Bihar, Hyderabad, Tamil Nadu, then accrued in India. So house property is simple, it's done. If house property located in India, then accrued in India. And accrued in India means for NR it will become taxable. Okay. Then next head, PGBP, income from business. Now see, this is important. Huh? Business income accrues in India when? If you have a permanent establishment in India. Wait. Focus on this. Tell me, for a non-resident, if he has some business, when will you say his income is accrued in India? If he has a permanent establishment in India. Means if we can prove NR, you Chinese, you Japanese, you Singaporean, you have a PE in India, so your income is accrued in India. But we have to establish that he has a PE in India. See, PE is also called business connection. Like for a Singaporean or a Chinese, if we can prove you have a business connection in India, that means it is also said you have a PE in India. It's one and the same. What is the full form of PE? Permanent establishment. We also call it as business connection. If that is proved in India, income is accrued in India, so he will have to pay tax in India. But the main problem is what, how do we know whether he has a PE in India? So PE means having a fixed place in India. Look, either having a fixed place in India or having a fixed agent in India for doing the business or having significant economic presence in India. Feel the word India. What should be in India? Answer what? Either a fixed place in India like an office, shop, warehouse, or having a dedicated agent in India whose job is to sell goods for you. See, in my all explanation, please don't forget you are NR. Imagine some Singaporean, Chinese, Japanese person, he is NR. We are struggling to decide whether his income is accrued in India or not. So tell me, imagine some Singaporean person is there. If that Singaporean person has a fixed place in India, then we say you have a P in India, or we also call you have a business connection in India. So what? Income accrued in India. Or if that Singaporean guy says, I don't have any office in India, but I have a dedicated agent who sells goods for me in India. So having dedicated agent is also P in India. Or there is one more criteria. Sometimes that non-resident might not have any place in India. He doesn't even have any agent, but his presence is felt by every Indian. He has got more followers on YouTube, Instagram. He has got good presence in India. Then also we say you have connection in India. You know what is the meaning of significant economic presence? Means here neither you have any office in India nor any agent. But see, you meet this criteria. Look, in India you have done transactions of more than 2 crores. Means you are of Singapore. Huh? With India you have done transactions of more than 2 crores. That means you didn't do any few transactions. You did transactions of more than 2 crores. Or even if you don't do any transaction in India on some social media platform, you have got more than or equal to 3 lakhs users. That means you know what government feels? This Singaporean guy, his presence is felt by Indians. See, when do you feel their presence? Either they have got many followers on Instagram, YouTube. See, you also know this, na, that sometimes from total foreign entity, if there are so many YouTube subscribers, you also become fan of them. So that means they are having their presence in India. So in short, see, there are 3 criterias. In short, what are we trying to establish? This NR has P in India. So how to prove? Either he should have a place. Place can be what? Branch, shop, anything. Either a physical place in India or agent in India, or what is the full form of this? Significant economic presence in India. What is the meaning of significant economic presence? With India you did transactions of more than 2 crores, or in India you have got followers or users. How much? How many users? Greater than equal to 3 lakhs. That means your presence is spread in India. That means you have a P in India. And that means anything you earn from India, you will be taxed. We have written, proving these 3 things will say that your income has accrued in India. Okay. Now the next question is what? Look. How to decide whether you have a fixed place, fixed agent. Say this thing I have not explained in detail. Huh? Okay. This I have finished. Having a presence means what? Doing transaction of more than 2 crores, and that thing I said. This thing and this thing I have to explain in detail, which I will not touch now. Because even if I touch now, it will not get over within the available time. Okay. So I will do one thing. I still have 5 minutes or so, but touching this will be risky. See, don't think it is over. Huh? Right now you will feel, yes, it's done. But here there are good points where in fixed place, even in fixed agent, there is a detailed explanation. But ignoring that detailed explanation, as of now, we can say we have done. So if someone says, how do we know NR's permanent establishment is in India? So what are the 3 questions you will ask? You have a fixed place in India? Then yes, you have a P in India. Or if no fixed place, then fixed agent in India. If not that, then you have significant economic presence in India. If any one of the thing is proved, we say your income is accrued in India. And income accrued in India means you will have to pay tax in India. This is for PGBP income. Huh? I am going headwise. In short, see, our section 9 is still incomplete. I wanted to go and travel to each head of income. Salary head, done. House property head, done. PGBP, done or still going on? Still going on. Then capital gains I will take. Then income from other source. Only when I travel through all 5 heads of income, I can finish section 9. In short, this is still going on. Okay. Now, take your homework question. In homework, you have got question number, wait, today I taught, yeah. Question number 6 is homework. Question 6 is homework. Question 7 is homework. 6, 7. And one question 5. You know, question 5 is based on what? It is based on this concept. Look, conversion benefit, first proviso to section 48. This I have already explained in the topic of capital gains. But in capital gains, that time I just explained the theory. I took one small sum, but I didn't give any homework. So that capital gain thing has come in our NR taxation topic. So that is homework. This is question number 5. So question 5 is homework. Then 5. What was the other? 5, 6 and 7. 5, 6, 7 is homework. 5, 6, 7 is homework. Then actually wait. 5, 6, 7. After 5, 6, 7. See, one more question I wanted to give for homework, but I'll do one thing. See, first make sure you revise whatever I taught till now very thoroughly, because this is a little advanced question. See, in my book, question number 12, then 13. Okay, 13th I can give homework. See, 12, 13, 14, these three are very important questions. And you know why I'm reluctant to assign this homework? Because I want that all your previous theory of NR taxation should be so thorough, so that this 3 question goes very smoothly. Okay. Question 12, 13 and 14. But I will do one thing. Question 12, 13 I can give homework. So see what homework question you have. Question number, repeat, 5, 6, 7 and 13. These 4 questions are homework. And question 13 is based on FII. FII dedicated. You will not find it tough, but it is a good question already come in past paper once or twice. So 4 questions are homework. Question 5, 6 and 7. Sorry, 5, 6, 7 and 13. Please do the homework and come. Please revise and come.